please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Motherson Sumi posted what was a mixed set of earnings this quarter. Strong revenue growth was seen across segments, but high raw material prices impacted margins. Sonia is here to decode the numbers for us. Sonia, morning.
Hi, Ekta. Good morning. Yes, it was a mixed bag for the company this time. The revenues were good. Across all segments, we saw double-digit growth in revenues. But really, a couple of issues hit the operating performance for the company. We had, higher raw material costs, higher freight costs. They had a forex hit as well in their overseas business. That impacted their profitability. All of that put together restricted their margin growth. In fact, the overall EBITDA margins fell to 9.7% versus 10.8% earlier. The profit growth was also marginal, just about 5% or so. Now, the overseas business has seen a decent growth on the top line. So, two of their subsidiaries, SMR, PBV, and the revenues grew by 11%. However, there was a forex impact of almost 16 million euros that impacted the business over there. All markets saw steady growth except Asia. In SMP, the revenues were much better. They grew by about 18%. The EBITDA grew by 31%. Their latest acquisition, PKC, saw a revenue growth of 27%. However, the company has stated that because of suppliers' material unavailability, their European business has seen an impact. Because of this, their freight and labor expenses have risen. The domestic business was pretty good, though. The revenue growth was very strong, up about 17%. But once again, raw material cost pressures over there. So I expect the stock to be a bit muted today because, for many quarters now, the business has been growing at a very fast clip. But this quarter, raw material costs and other higher costs like freight, etc., have hit their operational performance a tad bit.
Okay, all right, Sonia, thanks so much for that. Well, let's focus on earnings that are expected today. Tata Power, they'll be reporting numbers today. Anisha joins us early this morning to tell us what she's expecting. Hey, Anisha, good morning.
Good morning, Nigel. Well, with Tata Power, there are usually a lot of one-offs, something that we can't factor for. So the actuals can be very different from what we're suggesting in the poll. But if you look at the consensus, we are working with a top-line growth of around 11%. The margins are expected to remain steady at around 21.6%. The profits, however, are expected to dip down by 22% to come in at around 460 crores. Remember, last year there was a one-off with the income of around 250 crores. That is not expected this time. So that's why we are seeing an optical dip when it comes to the profits. Now, operationally, if you look at the generation, now that is expected to remain sluggish. Realizations are expected to improve a tad bit, and that's the reason we are seeing the top line growth as well. As far as the Mundra business is concerned, well, losses are expected to continue there. In fact, the under recovery might expand to 90 paisa per unit. So that might be a bit of dampener. Remember, coal prices have escalated quite a bit year on year, and that's the reason we might see a bit of under recovery expanding at Mundra. But to be honest, more than the numbers, this time around the street will be watching out for restructuring because they're already working for, the demerging the renewable business as well as the Panaton and West business. Also, we have heard reports about defense business being separated. Let's see if anything comes on that. Back to you.
Okay, all right. Thanks so much for that, Anisha. Well, Sun Pharma, that's going to be another interesting one today, not only because of their numbers, but because of commentary. Ekta, tell us, what do we expect?
Well, for Sun Pharma, I think Halol is going to be top of mind this time round because we all know that the inspection has begun for Halol, which started on Monday. It's expected to be a 2-week inspection with around 3 inspectors looking at the particular facility. And one of the inspectors, just an FYI, moved over from the Mariah plant onto the Halol inspection. So that is going to obviously be top of mind in terms of any sort of incremental information that we can expect. But separately, in terms of the numbers, what I would be watching out for would be the EBITDA margin guidance. For example, the estimate is anywhere between 18 to 23 odd percent. Consensus is working with around 21%, and the management had said the guidance for the second half would be anywhere between 20 to 22 odd percent. Whether they manage to stick by this guidance would be something that the street would watch for quite closely. In terms of the revenue, it is expected to decline around 14 odd percent, obviously led by the US markets. We all know what happened with Taro numbers. So that would be something that we would watch out for closely in terms of commentary, where they expect the US pipeline to go in terms of pricing pressure, as well as, the kind of complex specialty focus that they have, and what the plans would be for that in particular. So I think those would be the important points to watch for.
Okay, all right, Ekta. Thanks so much for that. Well, we'll slip into another short break. But up next, Fortis Healthcare will buy back the entire portfolio of assets. Now, Fortis, that's going to be the stock that's going to be in focus. as the board has accepted the resignation of the Singh brothers, and separately, the company has signed a definitive agreement to acquire the entire portfolio of the assets of Religare Healthcare Trust listed in Singapore. Ekta, run us through these details. The stock ended virtually at the low point of the day in Monday's trading session after the big run on Friday.
Yes, interesting. A lot of information which came out from the board meet. First is that they've accepted the resignation of the Singh brothers, and that was largely expected. They have set up a management committee in the interim. Interestingly, the other one is that the company has pushed the board meet to publish its Q2 and Q3 numbers to the 28th of Feb. So this is the second time that they haven't been able to release their Q2 numbers. First was on the 14th of November, then on the 13th of Feb, again because the board was busy with other measures in order to be taken up. But I think that despite all of the news which is surrounding Fortis, this might actually weigh on the stock today, that the numbers have been delayed to the 28th of Feb. Separately, like you mentioned, the board is going to be acquiring the entire portfolio of assets for RHT Health Trust. The enterprise value of this transaction is around 4,650 odd crores. While this is positive and it will boost EBITDA by around 250 odd crores or 270 odd crores, the details will be in terms of the execution of the deal. They have an enabling resolution to raise around 5,000 odd crores, and the management has, or the board has said that they have been in active talks with financial and strategic investors to raise funds. Now, whether this is a precursor to the deal, what happens in terms of, you know, the nuances in terms of the private equity or the money pals of the world who are lined up in order to acquire Fortis or ready to do so, that would be something that you need to see. But at the same time, the delay in terms of the numbers being released would be something I think which the market is going to take note of.
Okay, all right. Ekta, thanks so much for that. Well, on to some unfortunate news now. A blast at Kochi shipyard yesterday killed 5 people and injured around 11. We learned that the blast is likely to have been caused by a fire on the ship that was under repair. Union Shipping and Transport Minister Nitin Gadkari has ordered a probe into the incident, while also expressing regret and extending condolences to the families of those affected. We also spoke to Madhu Nair, the CMD of Kochi Shipyard. Let's listen in to what he had to say.
There are various inquiries that is underway. We have constituted a high-level inquiry committee. The factories and boilers director is on the ground. He is actually doing their part of the inquiry. His team, expert team, has been there. The police department at the highest levels, the Inspector General and the City Police Commissioner and the entire group has ordered a forensic examination of the spot. So and then the DG Shipping and the connected officials will actually come on board for a technical analysis.
Mangdam joins in to tell us what he's tracking from the F&O space. Mangdam, morning.
Well, good morning, Ekta. You know, one thing really stands out. We did move from the lows on on Monday's trading session, but then the FIs, they're continuing to sell every rally, and that's what happened on Monday too. In fact, from the start of this series itself, the FIs have added close to 1.1 lakh shorts in index futures, and that compares with about 29,000 longs that they have unbound. So together, it is a bit of a selling pressure that we're seeing in the index futures itself, and marry that with the kind of cash selling that we've seen, and you'll know the positions that have built. So the FIs, they sold about 1,500 crores on Monday in index futures, and also the long exposure by the FIs at series start, it was what, 80%, and now it's fallen down to 43%. That's telling you the FIs are net short on the index futures. So any up move for our markets could lead to a bout of short covering. FIIs on Monday also unwound some long positions in index puts given the up move that we saw, perhaps believing that the downside would be a little limited for our markets. And the active options that there were, 10,500 put, that one added about 2.5 lakh shares in open interest. The volumes were fairly feeble on the options front. The 10,400 call as well as the 10,500 call writers felt a little jittery, covered some positions, but the 10,600 call writers believe that they still have some more to go for the juice of 91 rupees that they have, believing that maybe upside we could face a pair of 100.
All right, Mangalam, now you were talking about marrying some data, etc. And you know, there's so many opportunities in this market, but today's a big opportunity, Mangalam. It's Valentine's Day. I'm sure next Valentine's Day, you're not going to be single, Mangalam.
I don't know about that, Nigel, but I know you and I both are devout people. Yesterday, Mahashivratri was more important than Valentine's Day, and for you, Lent starts today, so don't talk about all these things.
I'm keeping an eye on you, Mangalam, on that one. But are you going to be giving a biscuit, you know, if you're going to be proposing to your special one today, Mangalam?
The Little Heart, Britannia Little Hearts, that's what I'm going to
tell us, how are those numbers?
They were very good, you know, Nigel. 13% volume growth as against our expectations of 9 to 11%, coming on a favorable base. That's a good number. As far as revenues, margins and net profit are concerned, they were absolutely in line with our estimates. But tell you what, 13% volume growth and the company is saying that they will sustain a higher double-digit volume growth going forward is a big positive. So the stock should have a good day.
Okay, all right, Mangalam. Thanks very much for that. On that note, we're going to wrap up this edition of Power Breakfast. Stay tuned, Bazaar Morning Call up next.